It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Good morning, 31st of July 2019, 8 a.m. CET, 7 a.m. London or 2 a.m. Eastern as far as I understand. So it's a morning, it's a pre-London Open live market coverage only here on Light Forex Global YouTube channel. Piotr here. Good morning, it's my pleasure to be with you as usual. It looks like it's going to be very busy day, so I'm going to try to pass all the informations I have to you over the short period of time we have here ahead of the London Open. But we have to start with risk warning, guys. Please bear in mind trading effects on margin carries a high level of risk. May not be suitable for investors who can sustain less of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Alright, so let's have a look what we have. First, top left window, as you can see here, euro dollar. Exactly what we discussed yesterday from the intraday perspective. I took that long, half been cut, still holding a little bit of that, and targeting post ECB high. Just an update ahead of the London Open. So not trying to disturbing you, for you looking at that position, trying to figure it out. Okay, first we are going to have 2 more meetings today because of the busy calendar. We are going to meet at 2 p.m. CET. We are going to cover US ADP and Canadian GDP. But then 7:45 p.m. CET, 6:45 p.m. London, 1:45 p.m. Eastern, we are going to cover FOMC live here on Light Forex Global YouTube channel. So yeah, after the decision, after the Powell press conference, there's not gonna be much time to try to close the month whatever we want. So it might be few ugly moves, especially with a little bit lower than usual liquidity. That's gonna be very interesting. But let's start from the beginning. All right. So during the Tokyo session, Chinese manufacturing PMI below 50. 49.7, expectations were 49.6, previous 49.4. So we are still below 50 when we are talking about the manufacturing. Non-manufacturing PMI above 50, 53.7, but below the expectations at 54, previous one 54.2. Then we had also the Australian CPI, and here the market get a little bit better what was expected, 0.6 versus 0.5 and 0 previously, and that, to be honest with you, helped Aussie and is the strongest ahead of the London Open. So let's start with Australian dollar, and let's have a look what we have first with the neighbor. All right, so because it's end of the month, let's have a look where we are from the monthly chart perspective, and it doesn't look great, right? It doesn't look great, especially because of this upper shadow. So there was an attempt to go higher over the course of the month, but looks like we might end up where we started July, right? Now the thing is, what I like here is this possibility of the business finishing here. It might be August, right? So watching carefully levels around 0370, right? That might be from the bulls perspective, that might be some kind of the entry level with the stop below the low we had in March. All right. Daily chart perspective, as of now, so far so good, especially that we hit some stops visible here. So some stops being hit. So in that case, depends where we are going to close the day, but in that case we might think that there is some kind of the demand around the yesterday low and today's open, and the stops below in case of the retest of the monthly level around 0370. All right, so some kind of the range, trying to escape to the upside, but watch end of the day. It's still 12 plus hours to go. Okay, but as of now I like what we see here, especially that we have both central banks next week, and there are expectations the New Zealand Central Bank is about to cut. We'll see what the RBA is about to do. So yeah, so that's how it looks from that perspective. We are still trying to fight, but it was a few times crossed this demand from the this demand created on the late 29th of March. All right. So that's how I see the Australian dollar. We are about to get some answers around the end of the day. I would prefer to buy low towards 370 this time, and the first target is around 105. That's also the trend line, right? The next one, Australian dollar versus US dollar, huge sell-off. So we had some time ago, we created the plan with the possible move to the upside, as long as we hold levels above 69.50, but we are right now around 69 thanks to the good data. Still we have levels we are discussing as a possible finish business around 68.50. So same as on Aussie Kiwi, same here. It might be the last push lower, and eventually the rally looks like this 68.50, as well as over here. That's what we are trying to hold around 68.65 as a crucial zone for Australian dollar. In case of breaking down through this level, the 2019 low might be in play, and in that case we are talking about 67.25, 67.10. So watch out where we are going to close the day, where we are going to close the month, right? Because monthly chart doesn't look good. From that perspective, we need to close the month above previous month's open, right? So we are talking in that case about 69.27. That's what bulls need to do. from that perspective, and there is a chance because we have FOMC, right? Otherwise, retest of 2019 low gonna be inevitable. Okay, so we're done with Australian dollar, bouncing thanks to the better CPI, but don't forget RBA next week. Now, what about the European session? German retail sales, French preliminary CPI, Spanish flash GDP, German unemployment change, Italian monthly unemployment rate, as well as CPI flash estimate, core CPI flash estimate, Italian preliminary CPI, preliminary flash GDP for the whole Eurozone, and unemployment rate for the whole Eurozone, as well as Italian preliminary GDP and German 10-year bond auction. Pretty busy morning, so watch out carefully. Yesterday, HCPI was a little bit lower, but then overall, based on the regional readings, the German CPI was unexpectedly higher. So that was the also positive thing for the euro currency, right? So we are going to go through the major charts in a second. US session at 2 p.m. we are going to meet and we are going to cover 215 ADP and 230 Canadian GDP. Then we have Chicago PMI and crude oil inventories, and then again 7:45 we are going to meet again and we are going to cover live FOMC. Before we go through the particular currency pairs, let's have a look. What we have on the dollar side overall as dollar index. Let's switch to the dollar index. Okay, so dollar looks strong ahead of the end of the month. It's something President Trump doesn't like. Over the weekend, he mentioned that he would, if he would weaken the dollar within the minute or maybe a few seconds, right? And we haven't seen the reaction, to be honest with you, on Monday morning. We have right now a little bit of the euro rally, trying to retest post ECB high, but dollar is stronger because of the fireworks on the pound, and the dollar looks good on this index also because of the dollar yen overall. So where we are and what might happen. So again from this higher time frame perspective, we are testing the opening level of November 2016. So in November 2016 overall we had election. So it's quite important because where we are, because it might be some kind of the also related to the sentiment towards the President Trump, right? As of now, if I could move the market, right? If I could move the market. From the bear's perspective, if you are a dollar bear, you would like to see stop count above May high, above April high, right? This equal top over here. You would like to see stop count towards the FOMC, and then you would like to see rejection, right? You would like to see rejection, building upper shadow, and would be great to close below the opening level of June. In that case, we are talking about the levels close to 97.61 based on this trading view chart I have here. So you wanna see, in that case, you wanna see some kind of the upper shadow. Then at least at the very beginning in August, the bears may try to take over. So let's switch to the daily chart here, and we are testing very important levels, as you can see. All right. Now we can try to make some kind of the measures. Let's have a look what we have with this wave to the upside and with this wave to the upside. We are very close to the equal moves. So again, if we are about to change some direction, as we discussed, if you remember, in June I held 3 educational webinars, all of them available in the archive section here on the Light Forex Global YouTube channel. We might change, at least temporary, the current direction, usually after the stop hunt, right? So watch out very carefully today, especially that after the Powell press conference, there's not gonna be much time to manipulate the market to close whatever they want to have on the monthly chart. So pretty interesting. We are trying to create this swing high over here, right after 1, 2, 3, 5 each day over the last 5 days. We had higher high on the dollar index, but if you are going to check euro dollar, it's a little bit different story over there. Now, important information, maybe not important, but interesting information we get from Bank of America Merrill Lynch, where the analyst saying that possibility of the intervention, and not only verbal intervention, in regards to the strong dollar is increasing. So yeah, if Fed will not deliver, then I don't know. Then I don't know what may happen. So for now, from that perspective, swing high creation over here possible on the dollar index. But as I mentioned, I would like to see maybe another stop hunt to the upside, another push higher, to trying to tire the market totally, right? And lower time frame on the dollar index. Tiny range, and if we can agree that from the dollar index perspective, for the last 3 days there was a tiny consolidation, right? So watch out right now as we are testing the bottom of that consolidation. It might be some kind of the stop hunt. Watch out for a lower shadow. In case of the breakdown, the next level ahead of the Fed is this V formation over here. That's post ECB price action. So the top of that price action post ECB as a key. Okay, let's get back to the chart. All right. Let's check the options market. Give me a second, and I'm about to check if I see something. Looks like very similar to what we discussed yesterday. 11:45, we have 1.4 billion in expiration. So that might work at some point as a magnet. Then we have 1.1 billion at 12.50. So we have 100 pips range, right? And because of the day we have today, because it's end of the month, flow will dominate. To be honest with you, I wouldn't be surprised to see attempt to rally towards 112 and then pulling back towards 160, 150 in regards to this option expiration. But as I mentioned, I'm holding tiny long based on what we discussed yesterday, all right? Meaning that I took into the consideration the latest manipulation we've seen around the level over here. Okay, that's what we discussed yesterday, and after during our meeting we tested twice these levels. We saw the nice rally, continuation to the to the New York close, and there was an attempt to break and get back below Monday low, blue dotted line. Didn't happen. Lower shadow, trying to move higher. For sure, we hit the stops created at the very beginning of the Tokyo session, and running higher. Now, what might be the target? Of course, post ECB high. So we might try to finish the business. It's in relation to this supply we have over here to the left, created on the 23rd of July. So it might be the case that we are about to finish the business here. So that's the target. If we are going to cross these levels, right, meaning that we are going to run away from that post ECB range, and if we are going to double that range, that's the 1250. So now you've got the idea why we have some options at that level as well, right? And I'm not gonna be surprised to see this this type of the move ahead of the FOMC maybe. So and that's the crucial, right? If you remember what we were discussing from the higher time frames on the euro dollar, that's the crucial level, right? This 12.15, 12.25, 12.50, that's the crucial. That's this broken lows over here, right? Broken lows over here. So bulls. Bulls are looking to close the day as high as possible, but the key is 12.15, 12.25, 12.50. It looks a little bit different from the higher time frame perspective. That's what we discussed, because here we just need the close above opening in June, and the opening in June was 1160, the levels we are testing right now, and that's enough for bulls, in my opinion, to build a small lower shadow and to try to run away from this. On daily, we need something bigger, and we need 12.15, 12.25, and 12.50 to confirm, right? I'm talking about this tweezer bottom we had here. So that's how it looks. From the bear's perspective, the first chance is going to be this post ECB high to try to fade the rally, right? To try to fade that rally, okay? And at least retest post ECB low. But from the bear's perspective, we need to close as soon as possible below post ECB low. That would open at least 110, right? That would open at least 110. And if we are going to, because we made the measure to the upside with this 1250, right? That's this 1250. But if we are going to double that post ECB range to the downside, it's going to open 110, right? It's going to open 110. So for today, towards the FOMC, watching this ECB range looks like might be the key. Dollar yen. Interesting situation here. The February open working fine as a supply. We are inside the Monday range still. All right. We were trying to break to the upside yesterday. and as I mentioned yesterday, failure, trying to retest the downside of this Monday range, right? Very tiny ahead of the FOMC, and yeah, that's where we are right now. It's a crucial here, right, from the monthly chart perspective, because bears need to hold right below this February open. Let me show you again what we are talking about. This is the February range, right? Been broken in May, retest, upper shadow. So the question is what we are going to get, right? No fireworks after Bank of Japan, and all eyes on Powell and FOMC. Taking into the consideration everything, right? There was a pressure from the market side on Fed, like, yeah, let's cut 50 basis, right? But the data didn't support that idea. The data simply US data didn't support this idea, right? So market was trying to reprice few things, and looks like 25 basis is a case. The thing is, what's gonna be the statement, and the thing is the tone of the Powell press conference. So overall, right now, very, very interesting levels, right? And if you are a retail trader, you don't want to front run this pair, because as I mentioned at the very beginning, because of very busy day, because of the FOMC right ahead of the New York close, meaning right ahead of the monthly close, and with the lower summer liquidity, the ugly moves are possible, and you don't want to be part of the ugly move, especially if it's gonna be against you, right? So here I'm watching very, very carefully. I'm still tempted to go short because of where we are, right? But let's wait and see, right? Especially that from the daily chart, what happened over the course of last few days, we move above the latest weakness from the short time perspective here, right? The first attempt was huge pullback, and we are again above these levels, right? These manipulation levels, and okay, here, over here, and that might be the stage for bulls to try to push higher. Okay, we don't need that line anymore. So very, very interesting. Monthly chart, bears are trying to hold their levels. Daily chart, bulls trying to take over here. Very interesting situation on the dollar yen. Cable, completely different story. That's all about no deal Brexit, which for some are inevitable. So we saw huge pound sell-off because of the Boris Johnson hard stance. Again, that's what we discussed yesterday. 22, 80, 23, 20. You don't want to rush. You don't want to chase the market. We saw some attempt to bounce yesterday, right? Monday low first, but I do prefer this 22, 80, 23. That's the half of the Monday range. We made the measure yesterday to the downside. I think that 21, 20, 28, 80. That's what we tested almost yesterday. I'm not gonna be surprised to see push lower during the London session to hit the stops, and then some kind of the profit taking, right? Because we had this strong move ahead of the end of the month, so some profit taking might be possible here. If we are going to break 21, 20, 80, psychological 20 is open, and then below we have 118 and 116.50, 116. We discussed all of this yesterday. So I'm not looking to buy right now. Okay, I'm looking to sell, but the bigger bounce again 22, 80, 23, 20. But be careful because of the Fed. Okay. we got bullish private API data in relation to the oil. So the bulls are trying to recover towards the end of the month, right? So we closed the day at the bottom of this breakout candle. All right, we discussed this some time ago. We might try to draw this over under. So in case of the higher levels, in case we are going to move higher from here, right? So what is going on? 10th of July bottom, right? 10th of July bottom. It's a 58.29 based on my chart, right? So we are fighting around this level, right? In case of the EEA data later today being bullish as well, we might create this over under. In that case, we might see the rally towards 59.65, 60.20. So the 60 level might be tested again, right? To the downside, yesterday low, as the market trying to escape from that tiny consolidation over here, right? So that's yesterday candle is a breakout candle, right? So the bottom of yesterday, the yesterday low as a possible demand right now. If we are not gonna to include the lower shadows, if we are with the, inside this range, right, latest range, if we are going to use the bodies only, okay, after the breakout there is no, we might see some kind of the stop hand, and so I'm going to watch carefully. And here on the oil, I'm looking for a sell side. Of course, I would like to see some kind of the spike to the higher levels, but again, especially this evening, the price action here might be ugly as well. So from the intraday perspective, when we are talking about the oil, that's the levels close to what we discussed, something above 59.60. Buyers probably somewhere here, and we are talking about the levels in between 57, 56, 56.80. We are in the middle of that range right now, no man's land. Some may argue that is because of the break of the latest high over here, right? We might just see tiny pullback, the fight in the middle of the new range, and pushing higher ahead of the official EA data. Okay. And last week Google beat the estimates. Yesterday Apple beat the estimates. So better earnings report, 2.18 versus estimation of 2.10 earnings per share. And it was of course after hours. Over the course of the day, we were witnessing sell-off. So why I'm talking about this? Because the Google beat the estimates. We started with huge gap to the upside gap, and then we saw the profit taking. And if you are going to check the Google chart today, you are going to get what I'm talking about. So when we are going to have a meeting, afternoon meeting, after the Canadian GDP, we can try to look at the April chart, and we can discuss the thing here. The key here is probably 8,000. And let's have a look what we have from the higher time frame perspective. The key is May high, 7,850. Can we get the close below? That would be ugly. Because for now what we have is a rally based and probably attempt to continue the rally, right? A little bit different from the daily chart perspective, but anyway, those two lower shadows ahead of the end of the month suggest that the bulls are active around 7,930, 7,900 level, right? So very, very crucial what we have here from the Nasdaq perspective as well. So trying to summarize what we discussed this morning, you know, it's sometimes we have days like this, right? Meaning that maybe it's a worth just trying to avoid the trap. Maybe today is a day to try to educate yourself, myself, right? Meaning watching the whole day. We don't have to, you know, be in a rush to trade. Of course, from the intraday perspective, like euro dollar, like maybe selling spikes on cable, of course, yes. But if you are not sure, if you are not feel comfortable, maybe it's better to watch, and especially the fireworks this evening. One more time, we have a meeting at 2 p.m. CET, 1 p.m. London, or 8 a.m. Eastern. We are going to cover US ADP and Canadian GDP, and then again this evening we are going to cover live FOMC. Guys, don't be trapped. It was my pleasure to be with you here ahead of the London Open. Hopefully we are going to meet all of us again around the New York Open. So see you around. Take care and goodbye.
It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.